All right, yeah, going through pre-market prep real quick. Starting out with market trend model. So bulls had a little bit of a pulse on Friday. Started to see cumulative tick trending higher on the day. Market the filter tick itself too. Let me get the annotation too. Ever so slightly trending higher today. Still a lot of work that needs to be done here. We don't even have the railroad tracks up yet. We're going to get a significant gap higher though. And then keep in mind, vol M on Friday was, the call side was very flat as well, so we weren't really seeing upside. Call speculation was mostly driven by probably likely puts closing on Friday, so we need to see that vol M really start to expand higher as well. So yeah, I mean, more or less trading in a range here. So I mean, nothing to get super excited about right now. Like if you're desperate to catch the turning point, then this is a signature of what it looks like. But keep in mind, last Wednesday, I think this day was, prone to failure. So if today is that same thing, no idea. But keep that in mind. Okay, and then going down, start going through the SPX complexes, starting with the SPX-A first. Remember, this is the cruise ship. It's a lot bigger than SPX-P. It's where your longer term, slower moving capital is. Still in a put dominated environment, even once we gap up to 54.45 or wherever we're opened now, session is open. Still a very undefined area, no real transition zones to speak about. So in terms of the SPX-A complex, still a lot of thawing out that needs to be done. But remember, this is more like your cruise ship. I already said that, but it's just going to take longer to thaw out and see call speculation start to come back in. But for a sustained move higher, we need to see that happen in this complex. Just as the true zeros, these are just still trending lower. Obviously, you want to see those trending higher, which is more constructive. Looking at SPXP here, so this is starting to look better. We can look at the net OI above spot price. We can see calls start to dominate above there. Go back and look on Friday. This was not the case. So there's some evidence, that calls are starting to come back into the complex. We are opening up. I already said, again at 54.45. I don't know where we're at now with the session live, but yeah, I mean that's a natural progression of the market turning model, right? As the market trend model trends up first, then SPXP, then SPXA. So we need to see this structure continue to thaw out. It needs to get into the call dominated structure. It's still put dominated right now, but we are starting to see things thaw out. So something to keep in mind there. And then again, transition zones are pretty ill-defined right now, so just keep that in mind. I mean, 5400, that's going to be a key level. We'll get to 10 DT in a second, but that's key level 5425 here, another key level. True zero still trending lower, right? Need to see those, flip higher. Gex ratio. It's starting to progress higher, which is good to see. We want to see it get above 1 and then, really continue to progress higher. So just above 1 because A, calls are now dominant in the structure. B, this is kind of a level we failed to get through on this leg lower. So it'd be constructive to see that happen. Then looking at the SPX 0DT complex, so we're opening, already said it 2 times now, 54.45. Keep in mind, the DEX transition zone I identified down here is like 5260, 5280, 5275. So we are well extended from that. And the other thing I wanted to note is, net OI, we just have a ton of air pockets. And by air pockets, I mean low net OI exposure between the two. So, what that means is A, the transition zones are not really well defined. Like I can't really define a drunken sailor zone here for you. B, we are quite extended from the DEX transition zone right here. So yeah, so all that to say is, vol M, market trend model, intraday price action is going to be very important as opposed to, the moneyness of options and kind of the market maker dealer dynamics just because there's not a ton up here. So something to keep in mind there. 5400 is going to be key level to the downside. To the upside, 5500, which I'll show you in a second. So those are going to be, and then, just in between there is just big air pockets. So again, really focus on vol M, intraday. And then here, this is what our EM command looks like with price at 54.42. Again, opening kind of right in the middle of the range, 5400, 5500, those key kind of goalposts for the day. These are just gamma bars, by the way. Lastly, looking at delta balance, starting to look more constructive. You know, the net delta balance line. I know this looks messy historically, but looking out in the future. So the blue line, that's your net delta balance line. You know, that progressed above 0 on Friday, and 3 of the next 4 expirations, you know, we're going to be up near 1. So that is constructive to see. Obviously, that's Tuesday or Monday, Tuesday, Wednesday. You know, we want to see progress higher, but you know, net, it's looking better than it has been. It's not at least railed to 1 anymore. So, you know, market trend model is starting to thaw out ever so slightly. SPXP starting to thaw out, which looks good. Delta balance is starting to get a bit more constructive. GEX ratio is starting to get a bit more constructive. But keep in mind, all this stuff is literally on a 1-day basis, so we really have no trend right now of the structure getting better. So we need to see that kind of, you know, stacking days together before, you know, we get more comfortable that bulls actually kind of are taking the baton here. So yeah, I'm just looking at where price action's right. Right now, looking at price action, we opened right at 54.55. So yeah, kind of right in the middle of the range between 5,400 and 5,500. VIX is still, yeah, I mean, VIX is still at 33. So, you know, there's still a lot of volatility baked into the structure. So with that, yeah, good luck today. I'll be around.